What is yours?
Okay, thank you. Good morning, everyone, once again. I just want to seize this opportunity to appreciate each and every one of you. For me, it was actually dream come true. I was looking forward to this day. Lo and behold, I met beautiful people from different diversity. There's usually a saying that you get a significant success from what you actually have passion for, what you're obsessed with. For me, it's actually service. And that was actually manifested yesterday. I never knew I was actually going to be appreciated for just serving as a student rep, but all the same, everything worked out together for good. On that note, I want to just thank God Almighty for counting me among the chosen. We are the chosen. And for the school for opening up that window for me to serve. And ultimately, to the students who actually reposed confidence in me to serve, I dedicate my certificates to you all. Thank you.
You can take it in this pose and take pictures again. You can give us.
Are you a politician, man?
Well done.
Can I suggest that? Go into politics.
I could go into politics. I could.
You make it.
Thank you. I was going from somewhere.
Okay, thank you for that. Let's kick off. Good morning and welcome to our Credit and Lending Revision Day. I've met, I think, everyone. My name is Alan Swankie. I've been involved in credit and lending probably for 30 odd years on both sides. So I've done the frontline lending, I've also done the centralised assessment. So what I hopefully bring is a dimension of the practical application of what you've been doing. Today is flexible to a certain degree. We've done this a number of times, and having had feedback in prior years, I'm trying to factor in a few things that we haven't done before. Usually I try and go through the whole programme, so we touch on every element, and it gives everyone the opportunity to ask questions and to get an understanding. What that doesn't do is really allow us time to do case studies and do, again, the application, and the feedback in previous years was there was a preference towards an element of that. I'm going to ask each of you in a short time just to introduce yourselves and just to give me an idea of your current jobs and your background. And I mean literally a 20-second job, just so that we don't lose too much time. It helps me to assess those who are maybe involved in lending and are reasonably comfortable with a lot of the material, and those who are finding it really quite challenging, and it's something that they, is pretty well new to them. The reason I ask this is because we can do a couple of things. I have a DVD which is really on the basics of balance sheets, and it's had some really good feedback. But for those of you who are familiar with balance sheets, you would find it pretty tedious and something that, why are we doing this? I didn't have to come to Bangor. So we may actually split. It would be an optional. If you want to see it, for those of you, then we can show that. It lasts about 30-35 minutes, and the others can go and do case studies, and then we can do feedback on that. So we'll have a better idea once we've gone around the room, and you can decide as the morning goes on if you feel that's something that would be of benefit to you. The shape of the day is pretty well. We have a tea break from 10:30 till 11. A lunch from 12:30 to 1:30, and another tea break in the afternoon from 3:30 until 4. We're basically losing 2 hours through tea breaks and lunches. Now, you can decide yourselves how much of that you want to take. I'm quite happy to do one-to-ones with any of you, or do it in groups if there's common issues as the day works through. So either at tea breaks, lunch times, if there's anything you want to ask, quite happy to do that. Time's our biggest enemy. We've obviously a lot of material to get through. We were talking about the WebEx sessions. And the WebEx, and I'm apologising right now because WebEx is excellent, but when you have 100 and odd people on, it's sit there and listen to me for an hour. And it's far from ideal, and it's certainly not my preferred route. Having said that, there's not another acceptable alternative. So hopefully today, when we can get the chance to interact, we can maximise that as we go through. Please feel free to ask questions. There's elements of the programme I'm going to skip through quite quickly because it's an open book. For instance, the first chapter. I'm not going to spend any time really on the first chapter of the book. If anyone has any questions, again, I'm quite happy to field them. But it's pretty well black and white. When we get into the second chapter, we get into the meat of the programme, and I'll spend a lot more time on that because it's something that you will use to one extent or another tomorrow, and without compromising the process. It's just it's such a core part of it. I've got a lot of case studies, and again, the idea would be to work in groups. The third book, in terms of risk, we'll do an exercise in groups on that one as well. So that's really the layout of the day. If I'm labouring something too much, or you feel that we're going off at a tangent that you're uncomfortable with, please shout out. This is a two-way street. The benefit of having you here is that we can get the opportunity to interact. Okay? Everyone reasonably comfortable with that approach? Right, let's march on. I think I've covered everything I set out to do. And that. So, just a bit about Bangor, which I'm sure you've seen already in terms of its status and the regard it's held in. So, chapter 1 in the book. As I said, I'm not really intending to talk at any length on this because it's pretty black and white in terms of the business structures. I'm sure everyone's reasonably comfortable with that. Sole trader, partnership, limited company. Banker customer relationship. I've gone right off at a tangent. I'm diving right in. Sorry, I meant to ask everyone just to run round your names because I need to get that understanding. Tony, would you like to kick off? Sorry.
Yeah, Tony Maroney. I work in management consulting, advising banks, financial services companies, regulatory issues.
Okay.
I'm Vasco from Ghana, but I live in Geneva. I work with the Global Fund, a financial institution that works with is into health sector. We give grants to nations, about 106 nations, to fight AIDS, TB, and malaria. And I'm a finance analyst.
Okay. Can I ask, as part of it, can you say whether you've had any experience in credit and lending in a practical sense, just as part of what you're saying?
Not really, because we just give grants, we don't access them before we give them the money.
Okay.
Hi, my name is Linnea McWhorter. I work at Wells Fargo. I am an analytics consultant in wholesale financial crimes, risk, and compliance. Okay. And I do not have much of a background in credit and lending other than money laundering schemes involving credit and lending. Okay, okay.
Hi, I'm Phil Thorne. I'm from Barbados. I'm a central banking accountant. I'm charged seeing balance sheets and have
yeah, okay.
No experience of credit and lending.
But you know your way around the balance sheet,
yeah.
Obviously, yeah, okay.
Richard Blackman. I originally trained as an accountant. Now I am a senior business analyst with Royal Bank of Scotland. I have had experience with credit and lending with regards to looking at how problems within the bank and basically fixing it.
Okay. Based in Edinburgh or?
I was in Cockburn and spent a lot of my time in London as well.
Yeah.
Premier place.
Nice setup.
Yeah.
That's nice.
Udeni Champong from Untitled Chapter Bank, Ghana. I was a branch manager, but currently on sabbatical. I don't have any, really I don't do credit and lending. Okay. Because we have a department which does that.
Familiarity with balance sheets?
Balance sheet you do, but not into details.
Okay.
Yeah.
Okay.
I'm Joseph Amwa with the Ghana High Commission London. I'm resident in London.
Sorry.
Basically in charge of payroll and accounting procedures of the High Commission.
Okay, so again, lending, new to you?
I have no lending idea.
Okay.
I am Chris Romanan from Deloitte and generally advise banks on risk and regulations. Prior to Deloitte, I was at Lloyd's Banking Group, mainly in terms of credit risk, capital and impairment. So credit lending is mainly on the retail side, less on the corporate side.
Okay, okay. We're going to do an exercise in risk in the afternoon. You've cracked it in that group. Okay.
Yeah, my name is Ola. Ola Bingo from Nigeria. I work for a bank called Heritage Bank. I'm an executive on the board of the bank. Been involved with credit and lending for 26 years. Then from retail bank into investment bank.
Okay. Okay. Good group to be in.
My name is Oran Peter, currently reside in London. No banking background whatsoever, more I'm from the risk management side. I'm not even in banking. I'm currently not working. I stopped working to actually focus on the education academic side.
Okay. Okay.
I'm Fatima Imam. I'm from Nigeria. I work in Nigerian Deposit Insurance Corporation. I do bank analysis, but no credit and lending. So.
Okay.
She's my regulator.
Yeah.
Sorry?
She's my regulator.
Right. So you keep an eye on him.
My name is Michał. I work in Morgan Stanley in market risk control, and I don't have experience in credit and lending.
Okay. Okay.
I work for Heritage Bank. Recently moved to the risk division, but not much experience in credit.
Okay. Okay.
Jerry, I'm from Nigeria. I work for a banking and finance consultancy firm, Trust Adjusters, and we consult for bank clients and ensure bank compliance with respect to charges and interest rates.
Right.
Okay. So I don't have any experience on credit and lending because we practically just look at how the bank run their account and if it's in line to the guide to the company.
Okay. Okay.
Hi, I'm Azaz. I live in Dubai. I'm originally from Pakistan. I've been working for banks for 25 years, but I have no background in credit and lending. I worked at risk management departments, controls and compliance and audit, but no exposure to credit and lending. This is my
Okay,
first
so
time.
there seems to be a number of you with a risk background, which obviously the third unit is okay.
Yeah.
Okay.
My name is Juan. I work for a technology firm. We provide software for asset management organizations and wealth management.
So where are you based?
In London.
Okay. So again, credit and lending.
From the theoretical perspective of how the software manages the loans and the credit, but not the practical side of the credit.
Okay. I'm well covered on the technical side, which is good because I get challenged by that. So.
Hi, my name is Dorian. I'm from Romania. I'm a chartered accountant, FCCA, and I work for a bank, a commercial bank in the accounting department. So I'm involved in producing financial statements for bank and regulatory reporting. I don't have much of experience in credit and lending except that I know the products, how to account for it, and that's it.
Okay, okay.
My name is Andre. I'm a business consultant. I run my own business. I focus on asset management market. At the moment, I'm doing the restructure of my clients in Europe for UCIS business. So I am on the board of directors in Luxembourg. No credit experience.
Okay, okay.
I'm Sean Swan. I'm British, but I currently live in Qatar, in the Middle East. I'm Director of Regulatory Policy for a division of the Qatar Central Bank. I do have experience of credit and lending within the context of prudential regulation for banks.
Yeah. Okay, so the regulatory side.
Yeah.
Okay, okay.
I'm Liz, work for Barclays in London. I have very limited experience in credit and lending, only really on the kind of personal retail banking side.
Okay.
I'm Sydney, and I'm a management and business development consultant based in Sierra Leone and Liberia. Have very limited background in credit and lending.
Okay, okay, thanks, Sydney.
I'm Rafia Tunitiri. I work for Skybank, Nigeria, a business development manager involved in credit and lending, but still needs to know. Just the rudiments, I need to know more.
Okay, okay, okay.
I'm Uzoma from Nigeria. I work with Heritage Bank in Nigeria, and I'm in the information technology department.
Okay, so again.
So I don't have.
Yeah.
I'm Omaya from Ghana. I'm based in London.
My background has been in Ghana working for an investment bank, doing a bit of relationship management, investment advisory, and also working for Vodafone as a treasury assistant. But I don't have any experience in credit and lending as such.
Okay. Last but not least.
I'm Ike Williams. I'm the Chief Information Officer for Heritage Bank. The closest I've come to credit and lending is I led the team that deployed the core banking AML solution and loan application. Other than that, absolutely no difference whatsoever.
Okay. Thank you for that. Important because it gives me a feel for obviously the experience in the room. There's obviously a few of you with an accountancy background, and I'll try and allow for that. On balance, I feel probably it'd be worthwhile running the DVD, which really takes it down to the basics of a balance sheet. It takes you through each step of what a balance sheet is, but it may be worthwhile. Half an hour well spent. For those of you obviously with an accountancy background, then we'll get a case study and maybe get to work on that, so to make sure. No, I think it's just to make best use of time. The first unit obviously probably presents some of the biggest challenges from what you've said around the room in terms of the credit and lending and the approach to it. So I'll just pick up, we talked about the business structures, the banker-customer relationship. Again, the first three are all pretty straightforward and it's clearly documented in the book and it doesn't go into any huge depth. So given the open book aspect of it, in terms of use of time, I'm going to move through it unless anyone particularly has a question on it. The right of lien, simplistically, lien is the right to hold on to an asset of an individual. The best way to describe that is if Sydney had a garage and I've put my car in to get fixed, and he fixes the car and I refuse to pay him, he can hold on to my car. He can't sell it. He doesn't have the right to sell it to get his money back, but he can obviously keep the car until such time as I pay him, so it causes me a lot of hassle, and ultimately I would. So the principle of that, in a banking context, you can't take safe custody. Anything that's kept in safe custody, i.e. someone's to put something in the safe within your bank, you can't apply it to that. But that's basically what the right of lien is. And Clayton's case came up in the assignment. And quite a number of you got it right, which was encouraging. But obviously that first in, first out is quite important when someone dies, and it's important in terms of stopping the account. Again, you've all had feedback. Has everyone had the feedback on their assignment? Again, it was pretty mixed. Some people did get it right, but stopping the account is the key part to preserve the bank's right for a claim against the estate of the deceased person. I'm not going to go into any more depth on that. If anyone's got any questions, then please ask either at one of the breaks or later in the day. Again, impact of death and operations we talked about. Trusts, testate and intestate is fundamentally whether people die where they've had a will or there is no will. These are just peripheral to the programme, so again, I'm not going to spend a great deal of time on them. And electronic funds transfers are some basics of banking these days. Really, this is now we're getting into the real meat of the programme, and the bit that, given what we've been saying, is a key element. Well, what are the canons of lending? You've obviously had the book. What are they?
Use the mnemonics Campari.
Yeah, Campari is one of the mnemonics that we use for that. What is it? What actually is it?
It's basically testing or seeing whether the person that you're actually lending to is of character. And it's a way of assessing the lending criteria.
Yes. Yeah. It's a framework. It's a structure. What you'll get in a real situation, a customer comes in and provides you with lots of information. In an academic scenario, you'll be given a case study with just a lot of information as a customer would provide it. How do you start? And the best way to attack anything like that is to build it in a framework, to take a structured approach that guides you through the process and guides you to as informed a decision as you can make. And this is probably, of all the things you get to do, this is probably one of the most important areas that we attach right away. The structure It's 5 key areas. You talked about comparing. There are other ones. There's parsers. There's well, there's a number of them. But these are the key components. The 5 of these. Now, if you're given a case study, I would strongly recommend that you physically write down these as headings and structure your question like that. When you go through the case study, and you get something like this, and we're going to do this one later, but you just get a lot of information. As you're reading it, actually start putting the information in these compartments, if you like. What it does, it both structures it, but you then begin to see the gaps. You'll hear me talking a lot today about the financial jigsaw, that these are all parts of that picture. And when you've put down all the parts you've got, you'll find there's gaps, there's pieces missing. And these are the questions. In a real situation, the questions you would ask the customer. In an exam situation, the questions that will actually form part of your answer. In other words, in assessing this proposal, we would look for satisfactory responses to the following questions. So part of your answer is actually the questions that you would look to ask the customer. Okay? Now, as we work through, you'll get the idea, but the idea is very much start putting the information in, and you'll say, hang on, there isn't enough information in that. That's deliberate in terms of the case study, because the expectation is you'll identify that and you'll flag that up as a question you would ask to the customer. Let's work through it.
Is that a direct hint?
Pardon?
Is that a direct hint?
Is it, sorry?
A direct hint.
It is a direct hint.
Be careful.
It's a complete direct hint because there's one in every exam. So yeah, no, I stress this, that it's such an important part of credit and lending that yeah, I'm not compromising. It is a direct hint, but it's something that I say every year because it's so key to the process.
The handout part of this, the handout. I'll write that.
I told you. You're supposed to remind me. You failed. There's copies of the slides. I said it. I always do. I always dive in and always forget. He's passed them back. I haven't counted these. Can you just pass them back when you've passed them around? Sorry about that. And remind me when we go into the other units, because I've got them here for the other units as well. I do it every time. So, what we've done, we've talked about the framework. When we have a situation where a customer, we're rewinding it if you like, the customer's made an appointment to see you. Before you actually sit down with a customer, you've got to look at what you already know, what's available to you, what information is actually on file, or what do you know about the customer. And a lot of it will be on record. Obviously, they're an existing customer, their reputation, their track record, have they repaid previous borrowing, has there been any issues in the past, the turnover, the money going through the account, and balances over the last 3 years. Again, you'll hear me talk about a 3-year period. In terms of an analysis of the situation, 3 years gives you an idea whether it's improving, declining, etc. So you're really looking at the history of the customer with yourself. What if it's a new customer? What would you do when it's someone that's completely new to you? What type of questions would you be asking them?
Ask for a statement from his period.
Yeah, that's good. Excellent. Good. What else?
Yeah, sorry, I was going to say, yeah, you asked for see the financial statements for the last 3 years.
Yeah. What if it's a completely new start?
Business case, business plan.
Yeah, excellent.
Projected budgetary cash flow statement.
And another big hint, a business plan is always a key question or to add in to your answer. You would request a business plan, because a professionally prepared business plan, again, in a real situation, you would ask for that, which prepared by an accountant will give you the answers to many of the questions you're looking for in terms of projections, background, what the proposal is. So always, if it's not mentioned, always say we will be looking for a professionally prepared business plan.
How can you make projections if I will start the business today and this will be my first business?
Yeah.
I don't know, I want to sell a product to UK market, but there's no back history of my previous transactions.
You would, an accountant would obviously help you in that, and the way they do it is they would be looking at similar types of business, and it is a projection. It's, you know, obviously if it's an existing business and the business has been trending like that, then the projections should continue that trend, and it's a bit easier and they're a bit more robust. Where it's a new start, a completely new start, you're looking at, as I say, an accountant who's based on similar types of business and using their own background knowledge. But the importance of projections is, it's thought the process through as to how the business is going to conduct itself, but it also gives you a benchmark to assess it. In other words, month one we would do sales of £10,000. By the week into month two, you can then get the actual figure. Did they actually achieve £10,000? No, they only achieved 9. So you can say, okay, that's not bad. Month two, they achieved £12,000, ahead of the game, ideal. And so on with each of the areas of the projection. And if it gets wide of where they thought they would be, then you can then have a dialogue with the customer to assess what they're going to do about these variances and what actions they're looking to take. So you're absolutely right. Projections are exactly that. They're looking at the future and no one knows exactly, but it's a tool that you can use. But it also means that they have thought through the process, i.e. they want us to lend them money, so you're going to put that money into business. What are they going to do with it? And it's important that that thought process has gone through and been as with professional assistance where at all possible. Most banks actually have templates that you can actually, customers, rather than incur the cost, if it's a sole trader, small business, they can do it themselves. But obviously it carries a health warning that, you know, look at it closely and make sure you monitor it. Does that answer the question?
So in that case, do you, as a banker or as a bank, you need to consult somebody, an expert in that field? Because then it's a new business, you might not have an idea.
Yeah, I mean, a business plan, unless, in the corporate world it's different because they have a finance director who's got an accountancy qualification and they can produce that type of information. In the small to medium-sized businesses, they wouldn't have that level of expertise within their own business, and they'd probably need to buy it, i.e. go to an accountant and get that. Now, again, you will get customers who would complain. It's an expense at the outset, but for the reasons I've just described, it is actually, it's not just for the bank, it's an important management tool that they can monitor how their business is performing, because, you know, they've got money in the same way they're asking us to invest. The other thing you're looking for in completely new starts is what level of expertise they have. They come in, we want to open a small hotel. Okay, tell me about yourself. What have you done previously? You're looking for them to have worked in hotels for a considerable period of time, to have managed hotels. They're familiar with the HR issues, the finance, and all real aspects of that type of business. So they've got an experience that they're bringing to the party from day one. And it's not just something that they think it would be a good idea to try. A good example of that would be sports people. A lot of successful sports people open bars because they're the face of it, but they have obviously no idea of how to run a business, and many have lost a lot of money just because they've gone in ill-advised and you know, in many cases people have stolen from them. So that's we'll be coming back to this, but that's in terms of looking prior to the meeting. So, meeting the customer. It's always a good idea to, if where at all possible, visit customers on their own premises. I'm going to do something. I'm going to put these down in front of you. Please don't look at them just now. You just keep them turned over. I think that's everyone. There we go. There's 3 there. There we go. 1, 2, 3, 4. And you just keep them turned over if you would. 1, 2, 3. Okay, you just take one of those. Thank you. Right. Everyone got one? Turned over? Don't look at them. What I'd like you to do when I tell you is I'm going to give you 10 seconds. You've started? I told you to keep turned over. Right. If you turn them over now, you've got 10 seconds, and just read that, please. Okay, turn them back. Okay, back over. Okay, I'm going to give you another 10 seconds. I'd like you to read it again. Okay, start now. Turn them over. Okay, turn them back. You're worried now. You're worried looks. Anyone seen this before? Okay. This time when you turn them over, I'd like you to count the number of Fs, the letter F. And you've got 10 seconds, starting from now. Okay, turn them back over, please, everyone. Over. How many did you get? 5.
3.
3.
4.
3. 3.
4. No, I think it's 5.
Let's run around the table.
6. 6.
8. That's a first. I've been doing this for a long time. No one's ever got 3.
3.
3. 2. 3. 4.
3.
4. 3.
Well, everyone's got the same piece of paper, by the way. Just in case, you think. Okay, I'll give you another 10. I don't want to labour this because time's tight. Another 10 seconds.
1. Just recited it in my head.
0.
3. 3.
Okay, it's on the back. Anyone want to change their mind?
Yes.
5. 6. 3.
6.
Anyone else? Change their mind? 5.
6. Yeah, 6.
Okay. This table's very quiet at the back here. Okay, let's. Look, you can move this for quite a long time, but okay. Let's. Right. Don't circle them. I've got to use these again. Right. I'll not. You can milk this for some time, but time is very much of the essence with it. So, the answer is 6. I must see it too, but I'll have to find out where you got the 8. It's the letter of. When you read it twice, it's just one of those things that your brain just does. And 3 is the norm. For those that got 6, usually in a group this size, you'd probably get, it was about, maybe you get 4 or 5 that would get 6 right away. But most people, it's usually 3, they miss the of. So, a bit of, you can make a few bob in the pub doing that later, you know, when you get people and put money on it and such like. Why do I do this? The reason we do it is you see what you want to see. It's in front of you, but what do you actually see? So when you walk into a customer's premises, what are the Fs? What are the Fs you would see when you go in? Now, this could be any type of business. It's not, you know, it doesn't be any particular type. What would you be looking for? You've walked in.
Folks when you look at it depends what you borrow, what the lending criteria, what they're actually looking for the loan to borrow. So for example, if they're looking to buy assets or upgrade their assets, then you look at the assets as there is.
Yeah, I mean you're walking around with them, you're talking.
Yeah.
So they're so you know it's usually quite informal. Anyone done any visits in that type? In a lending situation? From a lending point of view, far away the most informative thing you'll do. They're comfortable, they're in their own premises, so they're quite happy to show you around. If they're not, there's something wrong. there's something you don't want you to see, which should be is a warning sign, but we'll get to that. Okay, yeah, what else? What else would you be looking for? You've just walked in, I mean, you see it in any business you walk into, even as a customer.
Obviously, how we relate to each other.
Yeah, yeah. What's the atmosphere like? Do they talk to each other? Also, the owner, how does he relate to the staff or the people that work for him? Does he know them? Is there a bit of a lightness about the relationship? Does he ask any questions about their family or anything like that? That sort of, they've got that type of relationship?
I'm also thinking about this in this different direction. Sometimes when we know people are visiting our homes, we put up a new our best. What you don't do every day.
Yeah, yeah.
So when you walk in as a banker and you want to see me relating to my staff, I can relate to them very well because I know you are coming.
It's what we call window dressing. If you have any thoughts that there is window dressing, that they're putting on a show for you, drop in unexpectedly.
Unexpected.
I was just passing, and I just thought I'd drop in to see how things were, and you'll see it. If you think that's the case, I mean, obviously as a courtesy, normally you would pre-arrange it, but if you think that he's showing you what he wants you to see, that's the way to do it. Just drop in, and just say you were passing. You weren't. You went out particularly.
Management team. The management team.
The management team. Yeah, you want to meet them.
You want to see what the person speaks about the business, how they speak. Do they speak proudly?
Yeah, that's important. That's important. They've got a passion for it, they've got enthusiasm. This is what we're doing. We put this new building up last year and it's working to capacity. And they've got that enthusiasm and energy is an important thing. If they don't have energy to make it work, no one else is going to do it for them. But they're asking us to lend money to them, so it's important that they demonstrate to you that they've got that capability. And again, we'll touch on this again shortly. What other type of things?
Product.
Yeah, the product, what are they actually doing?
So there are various regulatory or legal restrictions probably and accesses to various markets. We need to know if the customer is not selling something that is prohibited by the domestic law.
Yeah, it obviously depends on the type of business that they're in. Just building on product, the main type of things that you're looking for: staff numbers, how industrious, how well organised. If you go in and there's someone standing in the corner reading the morning paper, that tells you vast amounts. One, they're not busy, and two, it's not organised, and there's a complacency within there. Equally, if you go in, everyone looks as if they know what they're doing. It's well organised. It's tidy. And that applies to anything. I did a lot of farmers at one time, and you went to the farms that were all well maintained. The machinery was well maintained. Everything was well organised, and inevitably, that when you looked at the performance figures, that reflected it. It was just that's the type of business, and it applies to any type. The very first visit I did to a customer many years ago, it was a ladies' dress shop, and you went in and I looked at the figures before I went out, and I thought the stock looks quite high. The minute you walked in the door, you knew that the problem was it was around the store. Literally, it was like that. And what did she want to see us for? She wanted money to buy more stock. And it was bursting at the seams. Now, that was an assignment question, part of the assignment question. The answer to her was, no, we can't lend you more money, because she would just continue the same behaviours. She had to sell stock and liquidate that and get working capital back into the business. So that it wasn't borrowing she needed, it was reorganise the business. And now big businesses are very good at this. Companies such as Zara, the clothing, similarly their stock control is phenomenal. That if a particular line, obviously high fashion is dependent on quick turnover, but if a particular line's not selling, then it goes all the way back through the manufacturing process. Within days, they can stop manufacturing that particular line that's not selling, and that's excellent control. That you're right on top of it. Obviously, the SME market's different, but stock is a key part. The management of stock. Again, the premise is well maintained, over or under capacity. If there's lots of machinery or anything lying about, not being utilised, then what's happening? So you just begin as you walk around to get a picture some parts of that jigsaw that we talked about that you're obviously going to use along with the financial information. So visiting the premises is a key part. So let's get back to, you've done your preparation, you've visited them, you're now sitting down with them. In terms of the canons of lending, the borrower, the character of the individual, that top one, if you have any question marks over that, you're probably as well not wasting your time or theirs by going any further. It's so fundamental. If there's anything, if you think they're not telling you the truth, if they think when you've visited that they're doing a bit of window dressing, then quite honestly, it's thanks but no thanks. Probably you should decide just to go your separate ways at that time. Thanks for the opportunity, etc. Their age, obviously, it's not an ageist comment. If someone's around 70 and they're looking to expand their business, you really need to know where the future of the business lies in terms of the next generation and what they're looking to do.
Yeah, for the first one, you could look at the credit references.
Of course, yeah.
That will give you an opening as to, so quick check.
Yeah, I mean, again, in terms of the preparation, you would probably try and get that prior to it. And as I say, if there was anything within there, sometimes you just get a feel when you go into premises. And something you mentioned about that, preparing for you coming, you can usually tell.
Also in a small community, you could also have an meeting as to the reputation and character.
That's very important. If you're in a small community, people that work for you will probably know the people that work for your customers. They're employed locally within the community. And rumours, and it shouldn't be underestimated, you know, in terms of your staff talking to their staff, as it were. How are things? Oh, we're quite quiet just now. Now, if you get that type of comment coming back and the bank account's under pressure, then that's a few warning signs. Now, again, we'll be talking about this in the afternoon when we talk about, you know, problems.
Okay, what if there's a good succession plan in place?
I'm going to talk about succession planning very shortly. Do you mind if we just... What you mean in terms of... if there is, then that's fine. That box ticked. We're quite happy with that. Because they've obviously got the experience there, but it's ensuring that if they're looking for a 10-year loan and someone's 70, the likelihood is they're not going to be working at 80. So it's really where the future of the business lies. So if you're happy with a good succession plan, then that ticks that box. Qualifications and experience, probably of these two, experience is the more important, that they've got the experience within the business. Obviously, if it's an accountancy firm or a legal firm, then they have to be appropriately qualified, but also they have to have that experience that there's certain partners or directors who have been involved in the business in various capacities, and they bring that experience factor. Business acumen, or business and financial acumen, organisational ability and efficiency, a lot of that is reflected in the way they prepare for the meeting. We've talked about the way we prepare, but if they come in, and that's not that they've gone and put a shirt and tie on to come and see you, that's meaningless. It's more that they've actually, they've got their financial information together, they've maybe spoken to an accountant, and they can answer the type of questions. They're on top, they demonstrate they're on top of their business. They know what's going on, they know the numbers, and that reflects on the type of people that you're dealing with. Am I blocking you out when I stand in? Are you sure?
Very slim.
Is that on tape? Can I get a copy to take home for my wife? That's how I do, that's good. So, the character, what is the character of the business? The character is really obviously the people. The business is an entity, it doesn't have a character. What characteristics do they demonstrate? Risk-taking or conservative, change-oriented or conventional, and that's where you're assessing the individual. And a lot of it reflects in the type of business that you're dealing with. If they're in technology, then you're certainly looking for someone that's change-oriented, that they've got to move with the times. Now, you could argue in this day and age that technology is such a key part of any business that unless you embrace that, you're going to be a casualty. So you're really looking for that reflection of the type of business that they're in, the type of individuals reflect the needs of the business. Now, do they take cognizance of all influencing factors and constraints? Now, there's quite a few of these listed within the book, but they do cover the type of... Now, these probably reflect the type of questions. If you were back to that canons of lending framework, the type of things that you're looking to ask or get answers to. Now, it won't be everyone in every case, but using these, the list, it's all in the textbook, almost as a menu that you would look at when assessing a business. So, just running down them. Capacity is very much, it's said in the broadest sense, the capacity of the premises, the capacity of the management in terms of their ability to take on any expansion plans that they're looking at. Excuse me. The management themselves, the capability that they demonstrate. We've already covered all these type of elements. And do they know when to get assistance? One of the things as businesses expand, we talked about the corporate side and having finance directors, etc., is that as your business grows and you think there's a marketing need, there's a need for a financial input, HR, that you actually physically buy that expertise in. Now, you might not employ someone full-time, but you can actually tap into it and pay for that sort of consultancy type of approach, and you have the expertise available to you. No one's is an expert in all these areas, so it's knowing that they know when is the time that they need to seek that type of assistance. That's good management. You talked about succession planning. Succession planning is a key one, obviously within the business itself, but you should also see the potential problems it can present. I had a situation, and it was a real situation, and it was something that in some ways was quite sad. It was a farmer, and he had 4 sons. Great business, really doing well, prospered, made really good money, excellent business, very, very good customer. The 4 sons had all been, and it could be daughters, but in the case in question they were sons, all born and brought up in a farming environment, wanted to continue, all went off to college, got the appropriate qualifications, excellent. All wanted to stay in the family farm. And that things progressed, they all got married, had their own families, and all of a sudden the situation where you had a business, a very good business with one family taking drawings out to live on, you had 5 families trying to live off one business. And it brought it down. Because how do you choose which one of your sons you're going to keep in the business and which ones you're going to... Now, they got to the verge in that case, and 2 of them had the sense, and they went else, and they actually went out and sought employment within the agricultural community in terms of it. So it was resolved, but it was at the 11th hour. The business was on the verge, just because of the money that they had to live. So it was a situation where, at a personal level, how do you choose which one of your family you want to keep in the family, and it's a question that naturally they were avoiding. So succession planning, just mindful of that type of thing. It's not always making sure you train and bring people up. It's looking at the internal situation as well. Obviously staff. Again, do you have the expertise? Are they well trained? Labour relations? What's the morale like? And again, when you're out there walking around, you begin to get a feel for that. You know, is there a good atmosphere in the work environment with the people? The product or service. If the word one appears, that's high in terms of risk assessment. That becomes a high risk. If they produce one product that they sell to a major supermarket chain, or they have one service, so literally all their eggs are in one basket, as it were, then if that relationship, if there's a problem, either in pricing or in the relationship, then it becomes high risk in terms of the product. So you're looking for it spread the risk. I'm not saying it doesn't work, but in the risk assessment, as we'll be looking at in the afternoon, it would become very high risk that they don't have any alternatives or options. So in terms of, and also in terms of the actual product itself, where it sits within the market, are there many sort of serious competitors? Again, where is it placed within it? And we'll be talking about competitors shortly. talked about the service really with the product. The market itself, is it expanding? Is it an area that is either at declining? Is it an area that's improving and increasing? So just to get a feel for that marketplace. We talked about the premises, we've talked about machinery and technology and ensuring these. Do they have a familiarity with their competitors? Who are their main competitors? If their main competitor decided to slash their prices, how could your customer respond to that? Where would they be placed if their competitor decided basically to try and buy business? And how familiar are they with them? The industry itself, is it emerging, maturing, declining, that type of thing? You can get industry studies and that gives you a benchmark of how your customer is performing. Now again, most of the banks have a central base on this type of thing, but there are industry studies available online, so you can compare your customer with how their performance relates to others within the same sector. Their cost structure, how do they manage? Cost is so important, the management of costs, and particularly if there's fixed costs being constant. In other words, if you have a shop in Oxford Street in London, your fixed costs are very high. So right away you have to make a significant profit just basically to clear yourself. Whereas if you're doing something online, then your costs are obviously considerably less. So how do they manage that? Economic conditions, again, in recent times, obviously it's put a strain on many businesses because of the economic climate. However, it also presents opportunities. There are businesses that prosper in an economic downturn. A good example being the repair business. If you repair machinery, repair cars, repair anything, the likelihood is that rather than replace machinery, people tend to keep it for we'll keep that for another year. We'll make it, expand the life of it. And so people who repair can actually prosper in these type of situations. Seasonality, how do they manage seasonality? Many businesses, I've got a friend who's a golf professional, has a shop. During the winter months, used to be really dead. He now sells clubs on eBay throughout the year. You can get tourism, Edinburgh. Obviously I'm Scottish, you see it there. They have very busy during the summer. During the winter, they now started, they have a New Year, Christmas, New Year, you can't get a hotel room in the city. And they've promoted that. So what was traditionally a real bottom of the graph, if you like, for that industry, they've pulled that up in terms of seasonality. It also applies to fruit and veg, that type of thing. Now you can get strawberries all year round in this country, whereas it used to be very much a seasonal thing. How does your customer manage seasonality? How do they sustain sales throughout the year, and how do they tackle it? Is a key part. Social issues. If sometimes it can have a big impact. If you have a customer who's got a business, say a shop within a community, and the biggest employer within that community decides to relocate their manufacturing process to the Far East, the spending power within your community completely plummets. Through no fault of your customers done absolutely nothing wrong. They've built their business and things have prospered over the years, but circumstances have changed, and it's how they handle that type of situation. And we'll be talking about that in terms of how that type of thing, when problems arise. I'll come to that in the afternoon. But a big issue in terms of, because usually when things are under pressure, the first port of call is the bank. Things are a bit tight. And when you hear someone say, things are a bit tight at the present time, can you extend my overdraft or expand the lending? Our job as bankers, you have to drill right into it and get an understanding as to why. It's complete negligence just to give them money to solve their problem, because all you've really done is solve their short-term problem and taken it on board yourself, but inadvertently you've not done them any favours. You've basically created a problem for both of you. So you have to get an understanding of what the underlying issues are. Profitability speaks for itself. Any legal issues, any changes in legislation that are likely to impact your customer's business, depending on, if it's the chemical industry, something like that, then it could be something, any changes that green related that could impact them. Any potential changes in government that could again have an impact on whatever sector your customer's involved in. Just the type of things. As I say, these don't all apply to every case, but it's the type of thing when you're assessing a business, the type of questions that should be going on in your head, and obviously the discussion with the customer. The last one's expediency. What's expediency?
That's like if Richard Branson, for example, his son wanted to borrow money, Richard Branson has a really big account with the bank, and you would in a way negate the lending criteria in favour of maintaining the customer with Richard Branson, for example.
Excellent answer. That's spot on. Yeah, it's exactly the situation. It's not always someone of his scale, but it can be the son or daughter of your biggest customer or biggest client who comes to you with something that really isn't viable. It doesn't tick all the boxes, but you have to watch and not breaching confidentiality, but you would have an open discussion with them and very much say, voice your reservations. In a real sense, what usually happens is the father or mother gets practically involved. They actually contribute financially, but sometimes they actually physically get involved in the business as well, and that resolves the issue. And usually you're looking at a guarantee from the parent. But again, transparency is the key thing, that you voice your reservations, you want to help, however, these are the type of issues. So that's a great example. And it's very much every case its own merits. If you were ever faced with it in a lending situation, you'd probably look at to take it to a higher level in terms of lending, just to ensure the objectivity within it. Okay. So that's really covered the people part, that sort of the character, the first part of the canons of lending. The next area is the purpose. Do the proposals meet lending criteria? There's two key questions there. How much do they want, and how much do they need? And that can be different questions, in the sense of they'll come in looking for a specific amount, and it's important that you determine that that is all that they actually need. Someone comes into you and said they want to expand, they've got shops, they want to buy a new shop. They look at the type of money they're putting up. Have they considered the legal fees? Have they considered refurbishment? Have they considered additional working capital? So you're just making sure that they have sufficient money to get things up and running at the time. So how much do they want and how much do they need? If anyone comes in and says, how much will you give me? That's a huge warning light, because in many cases it means that there's panic. I'll take anything you give me. It alleviates the short-term problem, and believe me, if you ask a team of lenders, everyone will have been asked that question at some time or other, that people will come in and it's just anything that will help the situation. There's not really, I can add a lot to these 7 basic reasons for lending. The challenging one is the bottom one, survival, and that's where the lending skills come in, where there are problems. Are you quite warm? Do you want the window open, or is it? Are you okay? Is everyone? You okay? Okay. So survival is the most challenging one. You've got to make sure it's not good money after bad, that there have been problems, and you're funding. You're digging a financial hole that they'll find increasingly difficult to climb out of. We talked about business plans and the need to ask for them as we go through. And a good business plan should tell you the following: where you are now, where you want to get to, and how you're going to get there. And that's simplistically what you should be looking for in a good business plan. And again, we talked about the business acumen of the customers, that they've obviously gone through the thought process, either themselves or with an accountant preferably. That's really the content of a good business plan. The contact details, a synopsis, a one-page summary of what they're looking to do, and then background, what they're actually doing, the process, market analysis, market strategy, who their competitors are, etc. The proposition, the management and staff, property, equipment, risk assessment. Again, all within a good business plan. So you can see the number of answers that would provide if that's put in front of you by a customer with a lending proposal. And it is obviously an ideal. The thing you've got to be careful of is if it's a sole trader or a small business, you can't really ask them to prepare on this sort of scale. But certainly at an SME level, definitely benefits. And a key, as I say, a management tool. If used properly, it helps them to monitor and run their business going forward. Financial information at the bottom. By the way, risk assessment, we'll be doing that, but I'm not going to touch on that just now. We'll talk about that in the afternoon. What financial information should we be looking for? Balance sheet, yeah.
Cash flow.
Cash flow, yeah. And when a profit and loss account is the last 3 years audited accounts, projected performance figures, cash flow projections. I'm just wondering about this DVD that I have on balance sheets and the merits of when to show it. How do you feel about this? Is this going through? Obviously, we're working our way through the book, and again, it's just very much a stand and listen. We will be opening it up. Should we break it? Do you want to see the DVD, or is again for those of you with an accountancy background? Shall we put it on?
The question is it relevant for tomorrow?
It gives you an understanding of a balance sheet and how it functions. It depends, and it's basic, but it does give you an understanding of a balance sheet. Now, again, some people will gain more from that than others. What we can do is we can continue with this, and we can then split the group later in the day, and I can show the DVD to those who want to see it. For those who would prefer to do case studies, then I'm quite happy to do it that way.
For me, I certainly want to see the DVD.
Yeah.
We can put it on the...
Yeah, shall we watch it?
Sorry?
Our break is at half 10, it's 10. Should we watch it and then go for the break and then continue?
Okay. Yeah, it's about the half hour or so.
My name is Julian Carruthers. I am Deputy Long-Range Planning Executive of Universal Internet. We have companies all over the world. We turn over £700,000 million a year. Or is it 700 million pounds? Or dollars? Anyway, something like that.
I'm Rita Scroggs of Scroggs Manufacturing. I have a wooden shed in Brixton. Last year I turned over £301,427.53.
Excuse me.
I work on the 51st floor of Universal House, and I am widely respected throughout the corporation.
I work in a corner of the shed, and my team think I'm a bitch.
I am a highly sophisticated manager. I know all about TQM, Theory X and Theory Y, hygiene factors, management matrices, and of course, the hierarchy of needs. The only thing I do not understand is finance.
I am a highly unsophisticated manager. I don't know what the hell he was talking about, but I watch the figures like a hawk.
My colleagues are highly sophisticated managers too. They do not understand finance either. All of us feel slightly uneasy about admitting it, so we have a gentleman's agreement not to refer to it. We leave the financial arrangements to the accounting people, just as we leave the catering arrangements to the canteen people. We believe in trusting people.
I don't trust anybody. But then fortunately, I'm not a gentleman. I cut my own sandwiches and I do my own accounts.
I would lose faith if I admitted to anyone in the corporation that I do not understand finance, since I am constantly approving financial statements, draft accounts, and balance sheets.
If I didn't understand finance, I would not lose face, but I would lose all my money.
I have come to this person for help because she is so basic and unspoiled that she will use short, simple words that I can understand, and not the obscure mumbo-jumbo that accountants try to frighten you with.
Because I am so basic and unspoiled, I'm very flattered by his attention. But just what is it he doesn't understand?
Well, I understand a great deal about management, but pitifully little about how business actually works.
Right. Later on, I'll tell him about working capital, P&L accounts, and cash flow forecasts. But we'll start by looking at a balance sheet. It is the window which reveals the business.
It is not the window which reveals the business. It is the blind drawn by accountants to keep us managers in the dark.
No, for the time being, we'll forget about the balance sheet. We'll just talk about money. In business, money only does two things. It comes in and it goes out. There are two basic things you have to know. Where did it come in from and where did it go out to? All right?
Yes, I understand. Good.
So, let's begin with where it comes from. Say you're starting a business. There's only two places you can get money from. The first is by risking your own, and perhaps getting some other people to share the risk with you. That money is called share capital, or the equity, and the shareholders are the owners of the business and share all its profits, or lose all their money. The second way to get money is to borrow it on a long-term basis and pay interest. That's called loan capital.
Light is beginning to dawn. There are only two places money can come from: share capital and loan capital. The owner's money and the money that they borrow from somebody else.
You've got it. Now that you've raised the money, where are you going to put it?
I am going to put it into the business.
I see. And what part of the business?
Into the part of the business that you told me to.
Right. Well, just as there are only two places money can come in from, there are only two places money can go out to. First, you can put it into things you need to keep. Buildings, machinery, cars, furniture. All those are called fixed assets. And second, you can put it into things you need to sell. Raw materials, piece parts, packaging materials, and so on. That money is called working capital.
I've heard of that.
So, there is the basis of every business. The two places money can come from: share capital, risking your own, and loan capital, borrowing someone else's. And the two places it can go to: fixed assets, things you need to keep, and working capital, things you need to sell.
I now know, which I knew all along but did not know that I knew, that a business is based on cash and that you start by saying where you got it and what you did with it. I now understand how business works.
He does not understand how business works because he does not understand working capital.
I can't imagine why she thinks I do not understand working capital.
Sorry.
Then let us ask him three questions. Does the rent of the factory come out of working capital? Mm-hmm. Does bank interest come out of working capital? Mm-hmm. Do wages come out of working capital?
Mm-hmm. Well, I can now understand why she thinks I do not understand working capital.
Do you want a lot of money in working capital or a little?
All capital is good, so I want a lot.
Mm-hmm. You want as little money as possible tied up in working capital.
I've changed my mind. As little as possible. Right, yes, I see that. No, I don't. I do not understand working capital. Not at all.
Right. Look at this. All businesses are the same. You put money in and you get money out. Sometimes you get less money out than you put in. Then you go fast. Sometimes you get more money out. Then you're in business. Is that clear?
Yes. Yes, I'm not stupid, you know.
Good. Now we know about the fixed assets, the things you need to keep. They're obvious, but they can't make money on their own. To make money, you need working capital. You need it to buy raw materials, and you need it to pay the workforce to turn the raw materials into something you can sell at a profit. You need it to pay the overheads, administrative staff, electricity, rates, insurance, postage, telephone, and all that. Not to mention the interest on the money you borrowed. Then you can start to make money. How? Well, look at Scroggs Manufacturing. I make teaspoons. All I do is spend 60 on 10 kilos of light alloy strip on Monday, change its shape, and sell it for 300 on Friday. I buy another 10 kilos of light alloy strip, I pay the workforce, I pay the overheads, and I put a bit aside. And I keep a bit for myself, right?
No, I'm not happy.
Why not?
It's so simple, I am getting suspicious.
Well, let's look a bit closer. Take that light alloy strip I buy on Monday for 60. On Tuesday, I pay Harry 20 for stamping it into blanks. Now I've got 80 invested in stamped blanks. On Wednesday, I pay Sharon 20 to press the blanks into spoons. Now I've got 100 invested in pressed spoons. On Thursday, I pay Bill 20 to pack the spoons and send them to the collection bay. Now I've got 120 invested in packed spoons. On Friday, I pay all the bills for the week's overheads. They come to 100. So now I've got 220 invested in a crate of teaspoons. That's 220 tied up in working capital. And on Friday afternoon, the customer collects the spoons and pays 300 for them. So I've recovered my investment of 220 in working capital and made 80 profit.
I see. It's really a sort of cash merry-go-round. Well, look, you put in cash and get raw material. You put in more cash to get it stamped, pressed, and packed. You put in more cash to pay the overheads. Then you sell it and get your working capital back and a bit over. Then you start again. See, cash merry-go-round.
For a sophisticated manager, that's quite a sensible statement.
Ah, I've got something right. I now understand working capital, sort of. I see that working capital is all the money tied up in things that you hope one day to sell to customers. What I cannot see is how she can live on 80 a week.
I cannot live on 80 a week.
I've got something else right.
I do not have to live on 80 a week.
Ah, she has a private income.
I do not have a private income. What has not struck him is that I have a 5-day week. I do not buy light alloy strip on Mondays only. I buy it every day. So, every day Harry stamps out 10 kilos of blanks. Every day Sharon presses 10 kilos of spoons. Every day Bill packs the spoons and takes them to the collection bay. Every day a customer collects the spoons and pays for them. It is a continuous process all through the year. So the cash merry-go-round goes on all the time. Because he is sophisticated, he will now be able to tell me how much I clear a week.
And this is the sort of problem I'm good at, because I am sophisticated. She clears 80 a day, 5 days a week, so she clears 400 a week.
He may highly sophisticated, but he's as thick as two short planks. He's walked right into my trap. Watch. Ah! Now, you say I clear 400 a week.
400 is correct.
Okay. If I spend 60 a day on stripped metal, how much do I spend a week?
300.
If I pay Harry 20 a day for blanking, what do I pay him a week?
100.
And Sharon for present.
100.
And Bill for packing.
100.
And overhead.
100.
So, how much goes out every week?
700.
And if I collect 300 on Monday, Tuesday, Wednesday, Thursday, and Friday, how much do I collect a week?
5 times 300 is 1,500.
So, if I collect 1,500 a week and spend 700 a week, how much do I clear?
800. I have fallen into a trap. I said she cleared 400 a week, but she has proved she clears 800 a week. I do not see how she has done this. But I do see how she can live on 800 a week.
I have trapped him because he does not understand about overheads. I have to pay 100 a week overheads, whether I make 1 consignment of teaspoons or 5 consignments. He charged a week's overheads onto every day's consignment, so he put 4 times 100 too much on my costs. But I only pay a week's overheads once a week.
I have learned my lesson. I see that overheads don't multiply like materials and labour. She only pays her overheads once a week, so the more consignments she produces each week, the more profit she makes on each consignment, because they divide up the overhead into smaller portions. I now understand working capital.
Good. Now that he understands working capital, we can leave the balance sheet. I can now explain the profit and loss account to him.
Ah, that's a different thing, is it?
Yes.
This is going to be a different thing.
Yes. The profit.
This is rather exciting.
Profit.
You know, I'm enjoying this more than I'd anticipated. I rather imagined.
Shut up now.
So,
thank you. Now, look at my profit and loss account for 1 week. Start with my income. I sold 5 lots of teaspoons at 300 a time. That brought in 1,500. Income, 1,500. Now look at my expenses. I bought 5 lots of strip metal at 60 a time, so 300 went out on materials. I paid Harry and Sharon 100 each, so 200 went out on manufacturing labour. I paid Bill 100, so 100 went out on distribution labour. I paid out 100 overhead, so I made a trading profit of 800 on the money go round. Then I got 20 on some cash I put on deposit and paid out 20 in interest on my loan capital. So I ended up with a net profit of 800.
now I understand the profit and loss account. But what I do not understand is this. If she's making 800 a week profit, why is she not filthy rich?
He does not understand why I'm not filthy rich because he does not understand what profit is.
I understand perfectly well what profit is. Profit is champagne and caviar and a decent tailor.
Profit is not champagne and caviar and a decent tailor. Profit is having a bigger business at the end of the year than you had at the beginning. Profit is what lets the business grow. Working capital makes the business go round, but it can't make it grow bigger. Not unless it makes profit first. Suppose I want to make my exports grow. I send catalogues to a lot of Europe's leading teaspoon buyers. I need extra money. Then suppose I get an export order every week. I have to produce an extra consignment. Another 10 kilos of stripped metal. I need extra money. Overtime for my people. I need extra money. Then I want a packing machine to help Bill cope with the extra volume. Extra money. There's no doubt about the best place to get extra money. Use the extra that came out of the working capital merry-go-round last year. And that extra is profit. Now, the first thing that happens to profit is the taxman takes his slice of corporation tax. Right? Then I and my fellow shareholders decide how much of what is left we want to put back into the business for next year's development and growth. Yes, okay. And the remainder, if any, we share out as dividends. For you, that one's for you, that one's for you. Thank you. For me. And we can spend that on caviar and cigars and a bulging wardrobe of fabulous frocks if we want to.
Ah! I'd never thought of it like that.
Wait a moment. Remember the two places money came from? Our own money we risked and the money we borrowed?
Yes.
Well, once the business makes a profit, there's a third place. The profit we put back into the business. It's called reserves.
Ah, yes. I understand reserves. And reserves are chests full of money stashed away in a bank vault.
Reserves are not stashed away in the bank vault, or not necessarily. They could be represented by machinery, or raw materials, or property.
Machinery? Machinery can't be reserves.
Yes, it can.
Well, she's using the word in a very silly and misleading way.
Yes, but that's the way it's used.
Oh dear, oh dear. Now please explain reserves very slowly.
Right. Reserves is an entry in the in column. It merely states where the money came from. From money retained in the business, it does not state what the money has been used for, where it has gone to.
Ah.
Some of it can go to increase fixed assets, like the packing machine for Bill. And some of it can go into working capital, like the extra strip metal and the overtime for Harry and George. And some of it can be put by for a rainy day. You can invest it.
Or stash it in a bank vault.
If you're very sophisticated, yes.
Well, now, let's see if I've got this right. Once the business has got going, there's 3 places you can get money from. Your own, share capital, borrowing, loan capital, and retained profit, reserves. And then there's 3 places it can go to: fixed assets, working capital, that's the old merry-go-round, and investments.
He's got it. By George, I think he's got it.
What do you think of it?
Yeah, that's quite enough of that, thank you. Oh, now at last we can look at a real balance sheet.
Well, we can look at a balance sheet, but it will not get us very far because I do not understand that bit over there about current assets and current liabilities.
Well, I see his problem. That bit is simply a snapshot of the working capital at a single moment in time. The merry-go-round suddenly frozen. Look, if I stop the factory working, you can see that 60 of my working capital cash has been turned into strip metal. It's just as much of an asset as cash, but in a different form. So I have 60 of assets in raw material. Then I have stamped blanks, 10 kilos of strip metal with 20 of Harry's labour as well, 80, and pressed spoons, 10 kilos of strip metal with 20 of Harry's labour and 20 of Sharon's, 100. That's 180 of assets in work in progress. Then there's a case of spoons packed by Bill and taken to the collection bay. That's 60 of strip, another 60 for 3 people's work, 120, and the week's overhead of 100. That's 220 worth of assets in finished goods. Then there's 300 I owed for a consignment collected last week and 200 I put in the bank yesterday. So there's my current assets. Raw materials 60, work in progress 180, finished goods 220, debtors 300, cash at bank 200, that's 960. Take away the 2 bills I haven't paid yet for 60 and 100, My current liabilities, that's 160 I owe my creditors. So, my net working capital at this moment is current assets of 960 less current liabilities of 160. 800.
I see.
Phew. Now, we can look at the complete balance sheet again, and he will explain it to me.
I will now explain the balance sheet to her. Right?
Yes.
Well, there are only three places money can come from. Share capital, which is put in by the shareholders on their own risk. Loan capital, which is money borrowed on a long-term basis. And reserves, which is profit, put back into the business. But the money's not there, it's in the business. Then there are only three places in business that money can go to. Fixed assets, which are things you mean to keep. Working capital, which are things you mean to sell. The money can be in raw material, work in progress, or finished goods, or in the bank, or people can owe it to you. And you subtract the money you owe other people. And investments, which are savings for a rainy day, or money put in someone else's business.
Very good.
I got it right. Well, I now understand how business works.
He does not understand how business works because there is one thing I still haven't told him. I will prove he doesn't understand by asking him whether he would accept this order.
Now this order is from Superior Snacketerias Limited. They want 5 shipments of teaspoons a week for 8 weeks from the 1st of April. Instead of the normal 300 per shipment, they will pay 400 to compensate for taking up the entire production capacity of the 8 weeks. Well, as a sophisticated manager, I can work this out. 100 a day is 500 extra a week. 500 extra a week for 8 weeks is 4,000. That is an extra profit of 4,000. I will accept this order.
He hasn't read the last sentence.
The last sentence reads, payable in full by the 30th of September.
I will now introduce him to the last of the 3 crucial documents for understanding business finance. I've shown him the profit and loss account, which tells you what happened to your money in the past. That's your financial history book. I have shown him the balance sheet, which tells you where your money is at present. That's your financial snapshot, a picture of the business frozen at a single moment of time. I will now show him the document that tells you where your money will be going in the future. That's your financial crystal ball. It is called the cash flow forecast. But first, I must ask him some more questions. How much a week will it cost to make the spoons for Superior Snacketerias?
Well, I think I can answer that. 50 kilos of light alloy strip at 6 per kilo is 300. Next, 20 per day for each of the 3 people is 60 a day. That's 300 a week, making 600 so far. And 100 overhead makes 700. It will cost 700.
And how much will come in each week?
400 a shipment each day for 5 days is 2,000 a week.
But when will that 2,000 actually arrive?
Payable in full by September the 30th. It will arrive in 6 months' time.
So how do we pay the people, pay the bills, and buy the new lot of strip metal?
We have some money in the bank.
Yes, we have 2,000 in the bank.
Fine, we'll use that.
Very sophisticated. So, let us look at the cash flow forecast. We start week 1 with 2,000. How much comes in that week?
Nothing.
How much goes out?
700.
Which leaves?
1,300.
So So we start week 2 with
1,300.
how much cash comes in week 2?
Nothing.
How much goes out?
700. 600.
So we start week 3 with 600.
600.
How much cash comes in week 3?
Nothing.
How much goes out?
700. There is no need to go on. I can see where all this is leading because I am a sophisticated manager.
All this is leading to a cash deficit after 8 weeks of 3,600, which means bankruptcy as the consequence of accepting a profitable order.
I have changed my mind about accepting that order. My advice is that we should not accept it.
Perhaps we should not accept it. Perhaps we should negotiate weekly payments. Perhaps we should borrow some more working capital from the bank. But whatever we do, we start from a cash flow forecast. There's no perhaps about that.
I now understand business finance. Do I?
Yes.
Yes, I do. Apparently, it's all about money. Money goes into investments, savings for a rainy day. It goes into fixed assets, things you mean to keep. And it goes into working capital, things you mean to sell. Working capital starts with raw materials. It then goes into labour to produce the teaspoons, the goods. It goes into the overhead to pay the bills. Then it goes to the customer who pays you more money than you put in. The money goes round again, and also you have some profit. Some of the profit goes in tax. Some goes into dividends, and the rest goes to making the business grow. I also understand that the more you produce each week, the more profit you make on each order, because you divide up the overhead into smaller portions. I even see that the less you produce each week, the less profit you make on each order, because it has to carry proportionately more of the overhead. I also understand the 3 crucial documents. The profit and loss account tells me what has happened to my money in the past. The balance sheet tells me where my money is now, and the cash flow forecast tells me where it will be coming from in the future. I am now ready to start my own business. You may be basic and unspoiled, but you have money. Will you come in with me?
I may be basic and unspoiled, but I'm not stark, staring sophisticated.
What's her?
Yes.
I mean, the accountants in the room, do you think that was a reasonable, basic understanding for people who... The problem is, you can't teach people to be an accountant in half an hour, but it's to give you some sort of basic understanding of it going forward. So, okay, is it worth including? Okay, okay. Let's, it's 10:30. We've got a lot to get through. We're scheduled for 11. Can we say maybe even just early, 5 to something like that, just to pull in the time? I'm trying to make the most of the time we have today. Okay. So is that okay? So maybe it's 5, so make sure that we're back, we're off before 11, if that's okay. Okay? Tea is through in the, just at the reception area.